Hi, my name is Ifeoluwa Obigbemi from ARM Investment Managers. I'll be taking you through the macroeconomic and financial market update for October 2024. For the Nigeria macroeconomics update, I will discuss two key updates. Number one, Nigeria inflation, and two, Nigeria capital importation. In addition, I'll be presenting an update and outlook for the Nigeria financial market for November 2024. In September, the average prices of goods and services increased by 32.70% year-on-year from 32.15% year-on-year in August. The increase in headline inflation was driven by the food inflation, which increased at a faster pace of 37.77% year-on-year after 2 months of year-on-year decline. On a month-on-month basis, headline inflation increased by 0.30% from 2.22% month-on-month in August to 2.52% month-on-month in September. Similarly, the monthly food inflation was the key contributing factor towards the higher inflation numbers. However, core consumer price index declined by 17 basis points from 2.27 month-on-month in August to 2.10% month-on-month in September. While we expect inflation to stay elevated, the high base effect could result to a lower month-on-month decline even as food harvest season leads to improved food supply. In Q2 2024, Nigeria's total capital importation rose by 152.8% year-on-year, largely due to a significant increase in foreign portfolio investment, which jumped by over 1,200% between first quarter in 2023 and first quarter in 2024. In other words, foreign investors showed more interest in Nigeria's equity and fixed income market during the quarter. This could be alluded to attractive entry prices on instruments within both the fixed income and equity space. However, on a quarterly basis, capital importation fell by 22.9% from first quarter 2024. Foreign portfolio investments accounted for 52.93% of total capital importation, while other investment and foreign direct investment contributing 44.92% and 1.15% respectively. For first half 2024, total capital inflow reached $6 billion, up from $2.1 billion recorded in first quarter in 2023. Now moving to the financial market. In October, the Nigerian equities market turned bearish with all shares indexed down by 0.92% month-on-month to 97,651.23 points, reversing its 2.05% gain in September. On a sectoral base, the oil and gas, banking and insurance sector saw gains, rising by 15.82%, 5.99%, and 4.16% month-on-month respectively, led by stock like Seplat 38.9%, Cornoi 12.7%, Jitco 11.9%, Access Corp 7%, Shuno Assurance 22.9%, and NNFM 19.1%. However, we saw decline in industrial goods of 9.32% month-on-month and consumer goods 0.52% month-on-month, driven by sell-offs in Boa Cement of 11.1%, Dangote Cement of 10%, and Dangote Sugar of 11.6%, which on the market. The key corporate event in October as follows: Haradel, an oil and gas sector, was listed on NGX at 702 Naira 69 Kopo per shares. Suppliers was granted approval to acquire ExMobil's onshore assets for $1.28 billion. Ohando share was suspended from trading due to delayed filings. Transcorp 144 shares restructure took place in the month. Nigerian fixed income market ended October 2024 on a bearish note, largely due to persistently tight liquidity impacted by 900 billion naira in OMO bill issuances, CBN FX intervention, CRR debt, and bond auction settlement. Despite a late month improvement in liquidity from FAAC credit, the market remained bearish, with the average rate increasing by 146 basis points month-on-month to 21.86%. Treasury bills saw a notable increase of 220 basis points to 24.22%, while federal government bond rose by 71 basis points to 19.49 basis points month-on-month. In the primary market, the Debt Management Office (DMO) held two Treasury bill auctions, reducing the offer to 456 billion naira, with the stop rate climbing to 18.25% and a bid to cover ratio of 2.11x. At the federal government bond auction, the DMO offered 180 billion naira in bonds, with the average stop rate rising to 21.25% and a bid to cover ratio of 2.18x, rising a total of 289 billion naira. Moving to the outlook in November 2024. In November 2024, Nigerian fixed income market is anticipated to remain bearish due to the tight liquidity, with system liquidity dropping from 955 billion naira in October to 270 billion naira in November. In addition, the high yield are likely to persist as higher inflation numbers remain in the picture. In the stock market, with October's mixed earnings results and market reactions, a slight relief in November seems likely. Investors may continue to take profit on certain stocks after the positive financial performance was reported with strong 2024 performance. We expect to see a rebound after profit taking, particularly on the banking index and partly the oil and gas index. Overall validity is expected to persist on these sectors. I hope you find this insightful and engaging. If you have any further questions or inquiries, please don't hesitate to reach out to your relationship managers or our customer service representative. And remember, remain invested in your tomorrow.